I could love you, I would. If I could love you, I should. And I seen this just so. In the black top as we go. But you still know it's small. And I can't write on my own. And we doing this brick by brick. This is lights out, not too long. We let it as I'm misunderstood. See that it's sex in me. I just wish I could. But it is for you, you know. I'm trying to choose you now. I'm starting losing now. I'm crashing, losing now. Come on. Fuck, I'm in the groove right now. Only in the States, don't know. I start in the safe right now. Still making money go right. Coming down, reaching now, gotta teach you now. And you coming down, leaning now, I'm misunderstood. See everything, sex in me. I just wish I could. But it is for you, you know. How the fuck I'm trying to choose you now? I'm stuck in losing now. I'm crashing, losing now. Come on. Check. Them I gotta keep myself protected. Shopping list got rollies to protect me. I don't wanna hit by your investing. Only hit me when you fully flex. Gotta keep myself tight and vetted. If I didn't set it, then I'm in it. It's the only thing I like now. It's the only thing I like now. No. don't need to tell me first, you know I know. I can never slow it down, the money no. I didn't even touch. Do you see that? I've been moving running in the city, G-Cut. I'm fine, trying to find you better me. Need a way, stepping up and moving like it's telling me. I know. You don't need to tell me first, you know I know. No.
All right, guys, what is going on? Welcome to Wall Street Wednesday. Hope you guys are ready to learn something. Hope y'all are ready to learn something. Excuse me. Just had lunch before the stream. Couldn't help myself. I had to take a quick trip to Chipotle, where crazy people on the road out there today, man. Crazy. What's good, Robert, Hotshot, Daniel, one of our newer members? Welcome. What's going on, Mason, Pop, Torty, Tang, Naruto, Shay, 2020, AJ, Big James, Jim Bob, Fernando, Ebernith, Jorks, Martin. Who else is here? 30, almost 30 people on. Right around 30. I guess I'll take it. We got a couple things on the agenda for today. Number one, it being Wednesday, June 18th, we have federal funds rate and a FOMC press conference 30 minutes after that. So that is coming up in about 50 minutes, the top of the hour. So I would expect volatility for today's PM session. You know what I mean? So I don't know what we're going to do between now and then. We may not see a lot. We may see some movement, but I guess I'll go over a few things and then we'll see what happens. All right. You guys ready to go? And drop some ones in the chat if you guys are ready to go. We had some questions in the Discord. I'll go over a couple of those so that way everybody understands. What's good, Marius? What's good, Jonas? And anybody else that I missed? Eddie. All right. Excuse me. So one of the first questions was about relative strength analysis. So relative strength analysis, all right, by itself, it's not bad. Standalone, it's not super great. But in conjunction with time, price, and context, relative strength analysis is a very, very good tool. So, in my opinion, what I believe is that relative strength analysis allows you to understand market manipulation. And it also allows you to understand accumulation, either accumulation or distribution. So it's interesting enough that we have lows on ES at 6,034.5, and this low here, okay, see that at 555. Okay, so this is looking at the times, right here. This low, right here at 555. We had the market at 8:30. Our equities open here. It does trade lower initially, but it does not make a lower low. Okay? Doesn't do that. When we look at Nasdaq at 555, okay, you have to align it at the right time, whether the body or the wick here, but either way, that low, lower low. See that? So it's not all that difficult. You're looking at correlated assets. In this example, it would be the indices, right? This is ES, S&P 500. We do not make a lower low here. Whereas Nasdaq does, it actually cleared out this one too, but that low there is taken here. You see how that works? So if somebody wanted to be bullish, right? And I think I deleted the markups earlier. If somebody wanted to be bullish and you like to buy below old lows, there was my inversion model right there. See that? So how do you know if this is manipulation? Well, immediately, I may not know for sure. I may not know for sure. But if we give it a few minutes, then we could easily tell ES not making a lower low, trades higher. Well, you could say here, right? Trades higher. We don't really have any imbalances there, but we do on NQ. So that last one here got traded through at 835. Next candle trades down into that inversion. It almost actually goes to the low. Body stays inside that. And then we launch, make a new high here. We have another pre-market high here, and then London's high is up here. So that was basically the move of the day so far. Okay? But relative strength, again, if we're coming back to this, relative strength is saying, okay, NQ has cleared out some lows. ES has not. Dow was higher. So in a perfect world, right? I don't know what that is. That's old from yesterday. In a perfect world, what you could do is, since they all three technically did differently, NQ went lower, ES went sideways, Dow went higher. So the way that I teach it, the way that I view it, is if we are going to get a reversal, then I want along the strongest index. The law of strength, remember that? 48 Laws video. You want along the leader. So by definition, it probably should have been Dow. You know what I mean? 836. That might have been late here. Retraces one more time right there and then takes off. But the point is, it does not make a lower low. It trades higher against the other two. And then they all, in sync together, trade higher. Okay? Do we have any more questions on that? In a market that is likely to go higher, that's how we understand that this, the Nasdaq, by the only one of the three to go lower, it is sweeping lows, right? Because if the market's going to go higher, it typically goes lower first. And that's why you see that. Now, hotshot, again, if they're all going to trade higher, you could long any of them. But it's typically better to buy strength. Now, that's not to say that you can't long the one that does clear the lows. I do that. You know what I mean? I do that because that, to me, right, if that's manipulation, we're not going to go back to that low, and I trust that more often. So like, say some of these later retracements, like say you don't like the inversion model for whatever reason, then that's what makes these, because the 1 minute doesn't really look all that great as far as looking for imbalances in there. I just didn't really like that. It makes something like that a lot easier to trust because, number one, that's the open at 9 o'clock. Number two, not only do you have that 1 minute inversion, but you have a 5 minute inversion here too. Look at that. See that overlap? Those are good entry areas as well. So we don't get above that or this quite yet. We don't really close above any of those, but we don't have to. Okay. But anyway, the point is that understanding that that's manipulation, that's what gives me the trust to long afterward for the remainder of the move, or maybe the second half of the move. So, because in a way, this is kind of a shitty buy model. It's kind of a shitty buy model because there's really no, I guess, there's a distinctive high, which is London's high. There's not really like a consolidation. That's why I said it's kind of a shitty buy model, but it acts like one. Meaning we had a sell program and then a buy program. It's just very distorted. Does that make sense though? Because it took a while for us to go lower, and we rallied higher almost, I don't know, like 10 times as fast as we went lower, which is not bad. I mean, it's equities, right? Equities open. That's when you get volatility. Maybe the 1 minute might make a little bit more sense. So we're going to take this off. But what I mean is, that's your high, right? That was your sell program. So we traded lower, retracement, cleared some highs, dropped down very quickly. Okay, manipulation's often fast. Speed, you know, it's a thing. And then it's basically manipulation, low risk buy. And then this in here was basically your first accumulation. And then second leg to go higher. Right? If that's your manipulation, this was your sell program, then whatever was utilized for shorts is going to be utilized to go long. It was such a large stop, but sometimes those large stops have pretty significant moves. Well, I'll tell you this. And this is where, look, okay? I'm going to preface this with saying, like I have been recently, I do not trade every single move. I don't even trade every day. Okay. And Pop, if you're worried about stops, what do you think I'm going to show you to lower your stop? What do you think I'm going to show you? I'm going to show you a couple more things too. Like on ES. ES was cool. I did scalp ES today. That was cool. It wasn't a home run by any means, and I'll explain that in a minute too. But if you're worried about stops, meaning they're too wide, like your mom, and we want to make them smaller, right? What do you think we're going to look at? Staying on this 5 minute time frame. Even if you didn't see that inversion. What's that? What's that? Well, that's another imbalance, John. Right. When you have two, you trade what? The first one, stop at the second one. There's your answer. You already knew that going into this. You already knew that. If you trade the first one, if your stop was at the low end of this one, because if that's the breakaway, then it shouldn't trade to the low end of it, should it? If you are targeting London's high, okay, there's your 1 to 2.6. The next, we're getting a sell-off. Remember those lows on ES? That may be something. The next 80 level above that is right there at 22,080. There's your 1 to 3. Boom. Using the same tools that you already know about. That you already know about, my friend. So if we step back from, actually I want to watch ES because I don't know what the target would be for NQ other than just a new low of day. Let's rewind for a second. Every concept, right, has a premium and discount. Really, you could divide it into fours, but honestly, that's a little bit too much. I don't do that personally, but I'll at least tell you so that way you can never say that I didn't tell you shit. But I simplify it a little bit more. I don't mind cutting concepts in half. Okay, premium and discount. Up candles, down candles, premium discount. Imbalances, premium discount. Mitigations, premium discount. Inverted imbalances, inverted mitigation, premium discount. Right? That's exactly what this was on ES today. Okay? So what do I mean by that? We'll take a look. What does purple mean? Purple means that it's inverted. Okay? A normal mitigation is orange. I made it orange. Okay? We do have that here. It's kind of shitty. Like, it ain't the greatest, but I don't make the rules. Okay? Price traded outside of it, into it, and away from it. So, and then we had this imbalance in here too inside of it. So that, although me personally at 645, I wouldn't trade that. But nonetheless, it does respond off of it. So that, by that particular time in trading lower, that's a mitigation. Right? But then what did we see this morning? NQ went lower. ES did not. We start to trade higher. Are we through that mitigation? No. Well, we pierced it, right? But we didn't really close above it. We only just pierced it. Not a problem. Market makes a new high in equities. Then we retrace, right? And then guess what? Just like NQ, very similar story. Not the same, but similar. We have two imbalances. One right there and another one right there, right? So that rule would have served you well. Now, you would have been buying after an up move and you would have taken a little bit of drawdown. But guess what? Would you get stopped out? Nope. When it got stopped. Then we do get a closure above that mitigation, right? So what do you think price is going to do next? I mean, you already know it fucking goes higher. But I'm trying to walk you through what the thought process is here. Is that imbalance that was bearish here and bearish here? Some response here, but boom, it just got traded through. So what was once utilized for shorts, what's it going to be utilized now for? You can put it in the chat. What is it going to be utilized for? If it was bearish, then we closed not only through the imbalance, but through the mitigation. So if it ain't bearish, what's it going to be? What is it going to be? Bullish. Taps right into inverted mitigation. Right into, okay, look at this. They say there's no perfection in trading, right? There's no such thing as perfection. Okay. Well, that imbalance here, I guess if you wanted to include the gap, you could, but I didn't. I'm just including that right there. Boom. Okay. What's the low on this candle right here? The low is 6,054.5. The low. 6,054.5. What's this candle's low? 6,054.5. Perfect. Not even a tick beyond it. Perfect. Perfection. There's no such thing as perfection in trading, John. Sure there is. Now, my entry wasn't right there. It was a little bit off of it. Sometimes the entries aren't perfect. Every once in a while they are. But you don't have to be. That's not the point. The point is we had a mitigation and imbalance that were utilized to go lower. Now they're going to be utilized to go higher. Why would it do that? Because it's going to clear London's high. Why is it going to clear London's high? Order flow is bullish, bro. And, okay, here's where some second order thinking comes in. Oh, second order thinking. What the fuck is that? Mental models video, baby. Come on. Don't act like you're fucking brand new. If we are going to have a market maker sell model, could you have a market maker sell model without manipulation? I guess you could, but I don't do it that way. So the idea is, okay, we left these lows here. We're going to run this high now. And then we might have a sell model. But if we do happen to form a sell model to go lower later, it's not going to do that without first running a previous session high and or a previous day high and low. So we do have that. And that's why earlier in the Discord I said 6,081 in a quarter, or I might have said 82 or 80. Close enough. One of those, okay? Because I thought, well, maybe we could clear that as well. But the market doesn't have to do that. Right? But that's the point. Second order thinking. Well, we left lows behind. They're going to come for that later. I don't know if it's going to be today or tomorrow, or they may leave it open forever. I don't know. Right? But during this time, right? If they left that open, if this is going to be a target for later, there needs to be a manipulation first. So if price has not seen, distribution basically, then you can ride that up there. You know what I mean? And that was the point of the scalp. It's basically the buy program of a market maker sell model. Does that make sense? Let me put it to you this way, because this shit gets really fucking complicated. I try to keep things simple, but you remember how I've shown you examples where you can get a sell model, or not that, you can get a market maker buy model, and then that terminus of the buy model becomes the manipulation of the sell model. You guys remember that, right? So do you realize how many stages that is? Let's just say consolidation, distribution, redistribution, accumulation, low risk buy, first stage, second stage. Terminus is manipulation for the low risk short, first stage, and then second stage distribution to go lower. Dog, that's a lot of stages, bro. That's a lot of stages. You don't have to trade every stage. Okay? You can trade more. You could trade one, or you could trade multiple. The reason I don't teach trading like that is because, bro, you're going to be taking... Bro, you could be taking like 10, 15, 20 trades trying to do that shit. And the moment you go on tilt, you're fucked. You're fucked. But if you keep it simple, right? And again, this is looking a lot like the second stage, isn't it? We still got 30 minutes, or just under 30 minutes until FOMC, right? Fed funds rate and then FOMC press conference 30 minutes after that. I don't think they're going to leave those lows there. I think we printed lows to run it higher, okay? Get the buy stops in, and then the carnage insinuates. So this makes all the sense in the world to go lower, below those lows. So that's, at this point, I mean, obviously we're in a steep discount at this point. We're no longer in a premium. But, you know, we'll watch it. Okay? We'll watch it. 1 minute kind of looks a little shady, but that's okay. All right? What would be some framework for a low risk short? So, to be fair, I don't really like the way we made the highs on ES today. I don't. To me, it's a little muddy. It's not distinctive. There's really no soup either on electronic side, meaning there's no like high and then higher high before going lower. We don't have that either. So that's why I said I think it's a little bit muddy. Now, again, do I make the rules? No. Do I form these candlesticks? No. Right? So I can't change the market, but I can change myself, right? And the perception. So the low risk short is basically the first retracement after a high, or the first retracement after a low's been set. Does that make sense? Now, what I was trying to look at a minute ago, because the stages really aren't that clean. It's really not that clear. Like, meaning this being like the first stage accumulation, and then this is the second stage to go higher. Because what I'm trying to do is eyeball it to see, you know, if that gets traded through and then used as an inversion to go lower. But this looks heavy. It looks heavy. Like your mom. But it's the first retracement, okay, after the high's been set. That's why it's low risk short or low risk buy, because it's very low risk, right? Like, for example, let's go back to NQ for a minute. I got an alert on ES anyway, right? Oh, look how heavy that is. Look at that. That's heavy. That's some Fat Albert candles here, huh? Yeah. So, anyway, let's take some of this stuff off. Low risk short, or in this case, low risk long, because the risk is very, very low. It's minimal. If you're trading the inversion with a stop at the low, right? That looks like you're going to get stopped out. It's like 2 points off, maybe 3 points off from your stop. Okay. I can agree that might make you shit your pants. Okay. Wear a diaper. I don't know. Low risk. And then even the very first new high, not even London high or any other pre-market high or even previous day's high. It's just the very first high already is a 1 to 3. Right? It's low risk. Aiming for another pre-market high, that's almost a 1 to 4. London high, 1 to 5.6. We'd have to zoom out. The 22,135 level, obviously that has not been met, but if we were targeting that, the target on that would have been a 1 to 8, almost 1 to 9. And that's good RR. That's just good RR. You know, it's not a scam. High RR is not a scam. Okay. But that's why it's called low risk. Because quite literally, it offers low risk. Now, if you over leverage, that's on you. That's your fault. right? That's your fault. And the inverse, again, here would be the same, right? But again, I'm sticking to my guns here. I didn't like the way we did this. What the fuck is this? Look at this. That looks like cheeks, bro. That is straight cheeks, in my opinion. Look at that. Look at that. What do I do with that? I don't know. But either way, either this right here or this right here. Either one of those, low risk short. We have like 4 highs right here. Which one's the highest? They're all the same. High's been set. We trade lower. Imbalance there. Or if you waited for that, oh, break a structure there. Okay. Then there's your low risk short. Right? Stop at the high. I wouldn't have done that personally. Yeah, I definitely wouldn't have done that. But again, this is me. Aiming for the lows, that's a 1 to 10. If you anticipate a run, let's say back into Sunday's gap, which I do think that is, I'd have to double check. I think that's what that is. A run back below there, boom, 1 to 11. Low risk short. What's good, Jonas? It's all good. You can be late. You know, you're not getting graded here. You're not getting graded, big fella. But anyway, I mean, that's simple enough, right? Low risk short, low risk buy. It's pretty much the first retracement after the higher the low's been set. Typically, that's what the inversion model is, or the Judas model, or the NCE model. Those are typically your low risk buys and your low risk shorts. Okay. Still got 20 minutes left. So now, if this was our first stage of accumulation, this should be distribution. But again, FOMC's in like, or Fed funds rate is in like 20 minutes. So that's going to override any sort of buy program or sell program. What's good, Scott? What's good, Eric? I'm also trying to learn how to journal as far as writing in one. How would you go about it? I think there's at least 2 or 3 videos on journaling that I have somewhere. If it were me, if I had to start over in terms of journaling, I would start with 1 to 2 sentences per day. Are you talking about trading journal or like a normal journal? Either way, I would write 1 sentence or 2 sentences every single day just to get into the habit. And then after, I don't know, a month, maybe a month and a half or some shit, I would then go for more. For the trading stuff, I would take screenshots, befores and afters, RRs, you know. And then I told you guys already about the Phantom accounts, like the Phantom Twitter account, just so you could journal electronically easier because you know the exact minute marker of what you thought and when you thought it. Like, you know how sometimes when I walk price like a dog and I'll, you know, tweet at the low and then tweet on the way up, like for the exit and stuff. That's what I'm talking about. So you could write, or you could tweet in here, oh, we have 2 imbalances. You don't have to take a trade. You don't have to do no RR. You could just say, hey, we have 2 imbalances. But we have equal lows and we have London's high. Like, I don't know. And then you just watch it. Okay, well, what happened? We went higher. Well, what did I miss? I'm not supposed to long with equal lows. Well, you can. You just have to know when those are going to be left open. And that's why earlier we talked about Nasdaq. Nasdaq running the low was enough to say, okay, they're going to run NQ higher. They're going to run ES higher too, but they're going to leave those lows because they're going to come back for that later. But for now, we're in a short-term buy program. But that stuff's hard to figure the fuck out, okay? That's hard to figure out when you don't know the information. Which is why I'm so adamant about putting it out there. Okay? I don't always get it right. Sometimes I'm wrong. Sometimes I don't know what the market's going to do. But I think I mentioned this yesterday. Not that I wanted to use the broken clock twice a day analogy, but I mean, it's true. I don't always know where the market's going. But at least once or twice a day, okay, now we got something high probable. Whether it's a scalp or a low risk short or a first stage or a second stage, whatever it is. You know, it becomes obvious over time. But that's how I would journal personally for the trading side. Now, it's not to say that you can't have an emotional journal, like a physical one, right? Like a physical one. And you could just write the times. It's 12:43. John's cussing a lot again, but he's a cool guy. It's not a big deal. But I'm in a trade and I feel uncertain about it. I'm unsure, or I'm having anxiety because price is hanging around my entry, or I'm kind of excited because I'm in at a good position and I'm waiting for the lows to be swept or whatever. You know, you write that kind of stuff. When you got break even, 1:45 p.m. I got break even or whatever. You know, I would review that stuff on the weekends. So that's probably a good place to start. On the left of the margin, you write everything. Yeah, I mean, I don't write everything, but I would just write the main points. What time it is, what you feel, you know, what you think's going to happen, or if you don't know, you know, write that you're unsure. You rant on there, Mason? I don't blame you. You're allowed to do that. Oh, that gives me a quick reminder. Dollar. Don't tell me the euro. Oh, okay. I thought we had cleaned out these lows. I guess we haven't done that yet. Shit, I don't know if we will do that, honestly. The dollar, okay? Dollar index. We have some very, very small highs here from yesterday afternoon. Right there. But this honestly could go either way. If I had to guess, and I don't like doing that, but if I had to guess, I'm going to say higher for dollar index, which in turn would be lower for euro. Now, I'm not saying we're just going to shit the bed 120 points or 120 pips on euro. That's possible. I'm not saying we're going to do that though. But, you know, we left these lows down here. We traded into a premium. I think this is Wednesday. Let me see. That gap right here from Wednesday, right? 5 to 6 p.m. right there. We traded into that and then lower through that. Now we're back into it and we've responded a little bit. So to me, that seems fairly bullish. But, you know, there's definitely some uncertainty here. I'd say I don't think the probabilities would be high, but I think probabilistically, I would say leaning more towards going for the highs than it is for the lows. But hey, if it goes lower, or even just like lower initially, I guess I'll be wrong then. So anyway, let's go back over to indices for a minute because we still got about 15 minutes before news. I think I might have briefly mentioned Sunday's gap in our market review yesterday. We did not trade into that in the electronic or regular trading hours, honestly. We didn't trade into that yesterday, but our overnight, like the settlement between Tuesday and Wednesday, that did give us a gap lower and down into Sunday's gap. Right? Friday the 13th to Sunday's open here. We did trade into that basically in today's candle. Oh, hell no, Omar. I'm not trading the news. I mean, I still have like stocks and stuff and silver and whatnot, but I'm not trading any futures positions. No. No. So we traded into that, right? So Sunday's gap, we leave the bottom half open. Traded higher during London. And then these two retracements here, what I found interesting, and some of y'all posted this too, was that gap as well. So not just Sunday's gap, but our Tuesday to Wednesday gap as well sent price higher. So I did find that to be interesting. And same with NQ, right? Damn, we rallied. But anyway, how far can price go below a low or below lows, an imbalance, and or a gap? See that? So we traded right to the low end of it. So pretty interesting. And that is also where, oh, look at that shit. Big old V8 or C8 logo here. But anyway, that's where that inversion was too. Our Tuesday to Wednesday, basically the overnight gap right there. So there's confluence. So that's pretty cool. Okay. Next on the list was inverted concepts, but I feel like we went over quite a bit of those already. We talked quite a bit today about inverted concepts. That was my point. Okay. For the inverted concepts, even like normal concepts, right? Every concept has a premium and discount. Now, the easiest thing to do, and I asked TradingView to do this years ago, and they never did, was add a midline, okay? Because that automatically gives you discount and premium, right? So we can tell, okay, that mitigation stayed within the discount. It barely pierced the premium, right? Once we got through that here, it stays in the upper half, right? That's bullish. So where do the stops go? Where do the stops go? If you want to have tight stops, they go to the low end. They go to the low end of that concept. Or if you want to have them outside, I would go as far as the low of the concept that you're looking at. So let me give you an example. Along here, right? For me, would justify a stop at that low or the low end of the inverted concept or this low. Does that make sense, everybody? That low. See that? Because if that is our inversion, it shouldn't trade to this low. And that is very close to this one as well. But either that, and that's going to get you barely a 1-to-1, you know, may not be worth it to you. I'll let you decide. And at the low end of the concept, gives you something a little bit better. So, and that's without going down in time frame or anything like that. So that's how I would do that. So drop some twos if you guys are with me so far today. We're getting near the end of the stream, but we talked about relative strength analysis. We talked a little bit about Sunday's gap and overnight gaps as well. We talked about the inversion model. We talked about some inverted concepts, more specifically the inverted mitigation. I think it's the most underrated concept there is, right? Personally. We talked a little bit about like low risk shorts, low risk longs. We talked a little bit about stop loss placement, some various stop loss placement ideas. And now we wait for Fed funds rate at 1 p.m. So turns out we traded right back into the range for ES. So it looks like, oh shit, we're fixing to go for the lows. And anybody who's like panicking is trying to get in, and now they just got wrecked. So if we do clear our high of day, which again, that's very muddy to me. If we're going to clear that, it's only going to be another 5 or 6 points to clear Tuesday's high. So we are going to see what happens today. At least initially. I won't be here for the rest of it. Like the FOMC, or excuse me, the press conference, 30 minutes after that, and then the rest of this. I'm not going to be here for the rest of that. But we'll spend a few minutes here. Well, Mason. He said long and short, just close the one that's wrong. I just don't even know what to say to that, honestly. I don't even know what to say. You can't really hedge in the US. I mean, unless you went maybe long 10 micros and then short 1 E mini. That may work. I wouldn't do that, but may be possible. Well, shit. You might as well just say, hey, can't get stopped out if you don't have a stop loss, right? How can you get stopped if there's no stop loss? So, long and short, full port split profits. And you guys just want to get banned this week, huh? You can't on Stoic FX? Oh, yeah. Oh, yeah. Oh, damn, Willow. He lost over 20,000? Yeah, if I lost 20,000 in one day, I'd probably be a little bit upset. I'd probably be upset. It wouldn't be the end of the world, but I would not have a good afternoon. And I definitely would have not taken the car out like I did today. And almost ran into that fucking bozo. Dude cut me off in a 40 to go 35. I must have had my horn on for like 12 seconds. I was like, get the fuck out of here, man. I'm calling ICE next time. I'm sick of y'all's shit. How about that? How about that? Oh, it wasn't all in one day, but didn't take long. He was in a few years prior and rode the 2017 bull run and flushed his profits right back down the drain. Oh, that's fucked. What's good, Brian? I mean, y'all haven't missed trades, okay? There hasn't been any setups that we've been looking for as of now. Fed funds is in like 3 minutes and some change. We have almost every asset right now, to me, like ES, dollar index, it could go either way, in my opinion. It'd be a coin flip. I don't want to put money on that. Maybe you think differently. You know? The only reason I didn't run into his dumbass was because I left my, what do you call it? I left my SD card here. It's in my computer, and it's not in my car. Because the car auto records. As soon as the engine cuts on, it starts recording. So yeah, you pull out from a side street into the fast lane, going under the speed limit. Yeah, you're done. You're done. And that's all I got to show. Be like, yeah, Your Honor, look at this dumbass. Here's the footage. Boom. But now I got world-class fucking brakes too, so wasn't that big of a deal. No, I don't, AJ. I'm out here just raw dogging it. I've seen a lot of police though. I don't know if they see me or not. It's not even road rage, Mason. It's just people don't know how to drive, bro. They just don't. That's the thing about, I don't know how it is in other countries, but I know in the US, you get a driver's license one time and you're good for life. They ought to make everybody do that shit like every 2 years or every 3 years. Get your ass back in a classroom. Understand what a yield is. You know what I mean? How to do a U-turn at a median. How to not do dumb shit. You just get it one time and you got it forever. Like, you can't forget. Nasdaq E-mini is the Nasdaq normal. Now, micro is 1/10. So like ES, $50 a point. Micro ES, MES is $5 a point. So a lot of people start off in the micros. That's okay. Even I would even say most of the time in a funded setting and even trading like a combine or a challenge account, I would say most of the time you should be in micros. Wow, Lewis, that's crazy. And that makes a lot of sense. But I ain't going to say nothing. Y'all are going to think I'm racist. But it makes sense. All right, let's see what we get here. Oh, definitely a little spike. Definitely a little bit of a spike there, dog. You see that? Trying to keep an eye on dollar down there too. Dollar down here. So those clean highs right here, that's got to be on the table. Or the market is wrong. Market takes those highs or it's fucking wrong, dog. Straight up. Wow, Fernando. I like some. I don't like them all. You know what I mean? But that shit was wild today. Like, I get cutting people off, but if you're at least going to match my speed, go ahead. But you're driving an old ass rusted piece of dog shit in front of a sports car? The fuck is wrong with you? You're in a 40 doing 35. In a 40 doing... You think I'm doing fucking 35 in a 40? I'm probably doing 35 over 40. Dumb bitch. Get out of here. I'm just kidding. I never break the law. That would be absurd. I would never break the law on purpose. That would be wrong. Wouldn't it? We don't do that. It's wrong every time it hits my stop loss. Yeah. That's probably true. That is probably true. Interesting. Interesting price action so far. Take a brief look at the dollar real quick. Ooh, you dirty dog. You dirty dog. Look at that shit. Look at that. Nice little sweep right below the low. You dirty dog. Dirty, dirty, dirty. What is British pound, dude? Honestly. Wow. If you ever want to see a buildup of liquidity, that is one right there. 100%. Well, market's wrong. We didn't get to 73. Market's absolutely wrong. It's your fault, chat. It's your fault. Yeah. I mean, that's pretty much all I got for today. We went over quite a number of things. You know, I feel like you guys definitely got some value today. Did you guys get value today? Drop some likes on the stream if you got some value. We got 69 people on the stream. Let's see if we can get the likes up. I would appreciate it. If you learned something today, if you gained some confidence today, drop a like on the stream. It would be appreciated. Let's take a consensus. We haven't done a consensus in a while. Let's do a poll. Are you guys bullish or bearish here? Look, I can't spell. Bullish. Bearish. There we go. All right, let's take some votes. Are you from here? Are you guys bullish or bearish on indices? My guess it's going to be 50-50, or maybe it might lean a little bit bearish because of the lows for ES. But for the indices today, are you bullish or are you bearish? They didn't lower rates, Scott. So what do you think that means fundamentally? They kept them the same? That's not a surprise. To be fair, we've been at the same since December. Well, from November to December, we went from 4.75 to 4.5. We've been at 4.5, and we've stayed there. We've just been chilling there at 4.5. I mean, oh, it means mean tweets incoming. That's probably what it is. It's probably just Jerome Powell just going, you know what? You know what, Trump? F you. I'm not lowering shit. Just leaves them the same. If they would have been lowered, I think very bullish. Well, I don't know. You know what would be a good study though, Scott? Is you should take a vertical line and you should go to the indices daily time frame, maybe a weekly, and you should delineate every rate change. Increase, decrease, stayed the same, and you should see fundamentally what that does. That might be an interesting study. May not tell you anything at all. I don't know. But that does seem interesting. Oof. This might be a 1 minute time frame kind of day. Or kind of afternoon, rather. But anyway, I'm probably just going to shut it down here. Again, keep in mind, in about 20-something minutes from now, we do have the press conference. So I believe that the volatility will continue. You know what I mean? So according to the Forex Factory website, it says that the press conference is about an hour long and has two parts. The first is a prepared statement. A prepared statement is read, excuse me. Then the conference is open to press questions. The questions often lead to unscripted answers. Yeah, that's bullshit. That create heavy market volatility. So it'll be webcasted on the Fed's YouTube channel in real time. That would be youtube.com/@Federal Reserve. So it's literally right here on YouTube if you guys want to watch it. I can tell you right now, though, listening to Jerome Powell will likely put you to sleep, man. If you're at work and this is your afternoon break, you know, that post-lunch drowsiness, bro, he's going to knock you out. He's going to put you to sleep, man. I'm telling you, if you try it. So if you fall asleep at work, don't blame me, or don't blame Jerome Powell. You've been warned. All right? So with that, y'all be good. Be blessed. It is Wednesday, which means the market review for all the members of this channel will be out tomorrow. Friday the 20th will be our next live stream. So if you have any questions between now and then, you can ask them in the Discord, or you can bring them to Friday's live stream and we can do some Q&A on Friday. All right, be good, be blessed. Don't do anything stupid. Be careful today. And I'll see you on Friday.